Indonesia was great. He's a great president. And we made a terrific deal where they opened up the entire country to trade with the United States. We weren't allowed to go in and trade. I think something similar will happen with I would say, India. And we have a couple of others. But I have to tell you, for the most part, I'm very happy with the letters. You know, the letters are a deal. You know, I can't explain it any better. The letters are a deal. The press doesn't want to pick that up. But I will veer from those deals on occasion when somebody is willing. Like if Japan would open up their country, they don't do that. They just don't do that. And I don't either. I don't subscribe to it one way or the other. But they won't do that. So we might just stick with the letter.
President Trump praising Indonesia for sealing a trade deal. India, he says, is next. But Japan firmly in the doghouse. Live from Sydney, this is Insight. I'm Paul Allen, diving deeper into the stories that matter with crucial context and sharp analysis. Well, a renegotiated 19% tariff makes Indonesia the first nation to have its rates reduced, among those targeted in Trump's tariff letters. Heriyanto Irawan of Indonesia's National Economic Council is going to join us to discuss what the tariff breakthrough means for the domestic economy. Meanwhile, Treasury Secretary Scott Bessent says talks with China are in a very good place ahead of planned meetings in the coming weeks. And a softer US stance on chip shipments to China helps Asian stocks pare early losses as tech gains in Hong Kong. We'll speak with Goldman Sachs Chief Asia-Pacific Equity Strategist Tim Moe on how he's factoring these developments into his outlook. Let's begin with the latest on US trade negotiations. President Trump says he's reached a deal with Indonesia for a 19% tariff on its exports to the US, and that's lower than the 32% rate that he announced in April. Trump says Indonesia's agreed to erase all duties on US imports and buy more than $19 billion of American products, including 50 Boeing jets. The agreement would be the fourth trade framework that Trump has announced after reaching a truce with China and broad brush deals with Vietnam and the United Kingdom. Meanwhile, Trump also says pharmaceutical tariffs may hit by the end of July and that levies on semiconductors could come soon as well.
Pharmaceuticals will be tariffed probably at the end of the month, and we're going to start off with a low tariff and give the pharmaceutical companies a year or so to build. And then we're going to make it a very high tariff.
Well, staying with trade, and US Treasury Secretary Scott Bessent says talks with Beijing are in a good place and markets shouldn't fixate on August 12, and that's the date the current tariff truce is set to expire. Now, he also told us the agreement to let Nvidia resume selling its H20 AI chips to China was all part of the broader negotiations.
I can tell you the one thing that we do not want is a digital Belt and Road springing up around the world because other countries or China are substituting for our American chip manufacturers.
This is the same chip, though, that the Trump administration blocked with export controls in April. So why the change in policy now?
Anne-Marie, you might say that that was a negotiating chip that we used in Geneva and in London.
So this was part of the trade talks when it comes to Washington and Beijing?
Yes.
Was it a quid pro quo then? As you said, it wasn't, but was it potentially to make sure that you can get the licenses when it comes to rare earths?
Yeah, I think it was all part of a mosaic. They had things we wanted, we had things they wanted, and we're in a very good place. I expect to meet my Chinese counterpart, the vice premier, in the next few weeks.
So when and where will that meeting take place?
We're still working on that. The Chinese leadership has a big conclave at the beginning of August, so we're trying to work out whether that could be in a third country before or after that conclave.
Will the administration release the framework of the Geneva and London talks?
Well, we have released some of it, And I'll tell you that now, having settled on tariffs, on the export controls, we can move on to the next stage of talks. And I think it's very important, both for the global economy, for the U.S. economy, and for the Chinese economy, for us to move on and talk about China opening its markets and the increased domestic and consumer production there.
Are you hoping to get to that next phase before August 12th, when that's currently the détente between these two economies?
Yeah, I think we're in a very good place, and I tell market participants not to worry about August 12th.
That's U.S. Treasury Secretary Scott Bessent speaking there with our colleague Anne-Marie Hourdin. Let's get you to some live pictures. This is the China supply chain opening ceremony in Beijing. There you see Nvidia's Jensen Huang. He's addressing the crowd there. He's making his remarks in Chinese. It's been a very good week for Jensen Huang. Of course, Nvidia, AMD as well, going to be allowed to resume sales of some chips to China. In Nvidia's case, it's the H20 chip, which marks a reversal of U.S. policy. So Jensen Huang having a very good week. His company, Nvidia, is now worth more than the entire economic output of Canada. So Jensen Huang there addressing the crowd at the China Supply Chain Expo in Beijing. Well, let's get now to Asian stocks. Goldman Sachs strategists have lifted their price target for Korea's benchmark Kospi index to 3,500, with key factors including Korea's high sensitivity to Fed easing prospects, as well as concrete progress on corporate governance reform. Now, that's been a long-standing issue among Korea's corporate conglomerates. Their call implies upside of almost 10% from current levels. Goldman also growing more bullish on Asian stocks overall, recently raising their 12-month target for the MSCI Asia-Pacific ex-Japan index to 700. They say the macro environment for the region is brightening and there's greater certainty around tariffs. Goldman also upgraded Hong Kong stocks to market weight, seeing benefits from dollar weakness. Well, joining us now to unpack this and other themes as well, Tim Moe, Chief Asia-Pacific Regional Equity Strategist at Goldman Sachs. Tim, thanks so much for joining us today. And I do want to start, if we can, on trade and the news that we've got that Indonesia and the US have reached a deal. It's to do with energy, agriculture purchases, 50 Boeing planes in there as well. But we've not got a lot of detail at the moment, nor even confirmation from the Indonesian side that this has actually happened. So how significant is this, and do you factor it in at all when making allocations in Indonesia?
Those were good questions, Paul, and thanks very much for having me on. So we, as you mentioned, are still in an environment where we're in what we call sensitivity space, as opposed to directly changing numbers, either at the macroeconomic level or at the earnings level. So the way we're thinking about this is that there are four key dimensions we need to consider, or investors need to consider, regarding tariffs. Number one is the impact on growth. Number two is the impact on valuations. Number three is differentiation within the region. And then number four is how we monitor the actual data that comes through in the next few months relative to changing in expectations once we have the actual hard numbers, hopefully by 1st of August. To Indonesia specifically, and I'll also frame this more broadly, what we've done in our recent work is to highlight what tariff expectations are underpinning our current earnings forecasts. In the case of Indonesia, it's about a 17% rate on Indonesia. So as you mentioned, Donald Trump has indicated a 19% rate on Indonesia, which would be slightly higher than the current one we're factoring in, but not a lot. So more broadly, what we've done is to look at the sensitivity of how earnings would respond to changes in tariffs as they're announced over the next few weeks. And the key point here is that a roughly 5 percentage point increase in tariffs could map onto about a 1% impact on earnings relative to our current baseline expectation. So that gives investors kind of a yardstick to appraise the news flow which will come out, which is obviously going to be somewhat likely to be somewhat volatile. The one point I'd like to make in addition to that, if I may, is that it's likely that the tariffs that were announced, they may well be somewhat above our current expectation for the region as a whole, which is about 18% tariff rates. However, even if the rates are higher than what we're modeling. The fact that there's certainty to the actual level after a long period of uncertainty suggests that markets may price that increase in certainty better. And the mapping we've done on this is that a 1 standard deviation change in global policy uncertainty could lead to a 4% improvement in valuation. So again, that's another yardstick that investors can use to gauge how the announcement of tariffs may affect not just growth, but also the impact on valuation.
Yeah, and in terms of valuation, when you cast your eye around the region's major markets, have you lowered your year-end targets at all, considering the maths that you just outlined for us?
No, in fact, we've slightly raised them because, well, let me just step back for a moment. So the context here is that after a low on April 9th, where markets have priced in a great deal of negativity about tariffs and got down at the regional level to about 12 times forward earnings, which was a standard deviation below the longer-term mean. Markets have had a very strong rally, as I'm sure everyone is aware, up 26% in the regional index from that April 9th low to last night's close. And that means the valuations have related to about 14.5 times forward earnings, which is close to a standard deviation above the longer-term mean. So from -1 to +1. So obviously it means that markets are priced in a certain amount of optimism. Our view is that some of that is justified, and that's justified not just by the likely upcoming certainty with regard to tariffs, but also the fact that rates are likely to be coming down, both at the short end of the curve in the U.S. and also at the longer end of the curve. We've taken our numbers down 50 basis points over time for the short end of the curve and 30 basis points for the longer end of the curve. And if you put all that together, then that suggests that markets may be able to hold on to this increased valuations that they've had, and then they're likely to be driven really by the delivery of underlying earnings. So our key view, and the reason why we've raised our numbers somewhat for our target out to the middle of next year, is that we think we've got about 9% earnings growth over this year and next. And if we can hold on to valuations, then that should translate into a corresponding gain in the regional index overall.
Tim, something else I obviously want to ask you about is tech and the overall picture in the Asia-Pacific at the moment. It's good timing because we've got Jensen Huang of Nvidia speaking in China right now. We'll just pause and take a listen for a moment, and then I'll come back to you with your thoughts.
Industrial revolution and a new growth opportunity for the incredible supply chain ecosystem of China. Nvidia 将技术与您我们长期的合作伙伴，以及众多新朋友携手，在 AI 世代共创繁荣未来。谢谢大家。
Well, Tim, I said it was good timing. It ended up being unfortunate timing. Just as we switched to him, Jensen Huang went back to Chinese, but he was switching between the two languages as he went. But look, he's in a great space at the moment. Those chip curbs that the US imposed have been reversed. Just wondering, with that in mind, it looks as if, although Scott Bessent didn't exactly say this, there was somewhat of a quid pro quo going on here. China's got access to chips. The US has access to some of those rare earth minerals it wanted. Does this give you some hope that we're on the cusp of a broader US-China deal here?
In a word, yes, although I think we need to have a certain amount of resilience and flexibility with regard to timing and definition of that, because there's been lots of twists and turns in this overall relationship, and I think it'd be premature to say that things would be finally ironed out. But getting really back to your question on technology, there's a couple of things I think are important to say here, Paul, and that is that we remain optimistic on the AI theme in Asia, and I think there's maybe two or three main points I'd like to get across. One is that with the advent of DeepSeek, the narrative shifted from hardware to software, and that, of course, powered recovery in many of the larger Chinese technology-oriented stocks. And that seems to be continuing. Not only have we had DeepSeek, but there's a new model, Kimi, which has come out, which is very, very powerful and compares on global benchmarks very well to the leading U.S. models. So that's, again, an indication that China's open source LLM advancement is proceeding apace. Within that space, within the AI space, we very much like what we call AI applications, which is the more software-oriented part of it, which is largely populated by the main Chinese companies. We also like the theme of physical AI, which is the theme of robotics in particular, which is a very, very strong forward growth path. And then we also like a related theme, which is the power and electricity pinch point, the idea being that AI is very electricity intensive, and the build out of data centers and so forth is going to drive significant demand for electricity. And there's ways to play that in Asia that we also very much like. The second key point beyond that sort of shift is that as this Nvidia recent news has demonstrated, is that the hardware theme is far from dead. The market priced that and was concerned about this shift from hardware to software I mentioned, but our view is that, yes, indeed, that's happening, but that doesn't at all mean that the outlook for hardware is over. In fact, it's very much reinforced by this. And so we remain very constructive on parts of the hardware chain, and that reinforces part of our constructive view not only on Korea, as you mentioned earlier in your broadcast, but also on Taiwan.
Yeah, and to reinforce your point, one of Jensen Huang's remarks there was AI is creating new growth opportunities for China's supply chain, and Nvidia will continue to partner with China. All right, Tim Moe of Goldman Sachs is going to be staying with us. We're going to turn our focus next to the future of Fed Chair Jerome Powell when his term comes to an end. We'll have more on how markets are weighing this uncertainty next. This is Bloomberg. Let's take a look at our iron ore prices tracking. We've seen a revival recently in China sentiment. That's being reflected in iron ore prices. It did briefly cross $100 per tonne. We're now just sitting a little bit below that. Some trepidation about how sustainable that is. However, Citigroup saying that those recent gains are driven by China-related speculation. And if we take a look at Fortescue stock here in Australia, it's a little bit soft right now, off by 0.25%. And I mentioned Fortescue because its only product is iron ore and its only market is China. US core inflation rose less than expected for a fifth straight month in June as the debates over the impact of tariffs continues both at the Fed and in markets. The details offer evidence for both sides. While the decline in car prices helped keep a lid on that headline figure, other categories exposed to tariff risks like toys and appliances jumped at the fastest pace in years. Markets still expect the Fed to hold rates at its next meeting as bets for 2 rate cuts by the end of the year continue to wane. Right, well, Goldman's chief regional equity strategist Tim Moe is still with us. And Tim, really something for everyone in those CPI numbers, particularly the wait-and-see team at the Fed. We've got a meeting at the end of this month. Only 3 left after that. Is time running out for these 2 cuts that the market expects?
Well, just to be clear, in terms of our baseline expectations, Paul, we're looking for the Fed to start cutting in September, and we're looking for successive cuts, so 3 cuts. The market was pricing that a little while ago. Now, as you said, it's moved to pricing slightly less than 2 cuts by the end of the year, and pricing 4 cuts as opposed to 5, which is our expectation out to the middle of 2026. And I think that's part of the reason why the dollar's rallied a bit. It's up 2% off its low. If you look at the DXY index, which troughed at sort of a bit above 96, it's now around 98, having peaked at 110 in mid-January this year. So I think the market's kind of taking some of that out and a little bit worried that there may be some pass-through of tariff pressure into pricing. I still think it's a bit early to be overly to draw too strong conclusions about that. So we are sticking with our views there, but obviously we'll adapt according to the news flow, which comes out. To be clear, if we are in an environment as our core view expects, of lower U.S. rates and a lower dollar all on a trended basis, then the parts of Asia that will respond to that most significantly, that combination of weaker dollar and weaker and softer U.S. rates, would be Korea, Hong Kong, Philippines, and Taiwan. Just to sort of put that on the board.
In terms of being a bit early, do you feel the same way about this discussion around Fed Chair Jay Powell's replacement? I mean, the Treasury Secretary, Scott Bessent, had some more remarks on that today. Let's take a quick listen.
Additionally, the Fed chair also steps down as a governor, and there's been a lot of talk of a shadow Fed chair causing confusion in advance of his or her nomination. And I can tell you, I think it'd be very confusing for the market for a former Fed chair to stay on also.
It seems fairly unambiguous that the Trump administration would like Jay Powell out of the room as soon as possible. But would you personally feel confused if he stayed on the board after being removed as Fed chair?
I mean, I think the first point to make here is that the importance of Fed independence is something that the markets focus on. And I think that's particularly important in the environment where the U.S. is running 6 to 7% of GDP fiscal deficits. And with the passage of the OBA bill, that's likely to remain the case for some time. We've seen a backup in rates in the U.S., 10 years around 4.4, 4.5, depending on the day, and 30 years pushing up towards 5%. So I think the market is attuned to monetary discipline if there isn't fiscal discipline. So I think that independence of the Fed is an important aspect to focus on. As to whether Chair Powell stays on for the following 2 years, that is part of his his right. So I guess we'll just have to see exactly how that plays out. I'd rather not sort of guess as to what may happen there. I don't think it's appropriate to do so.
Yeah, fair enough. But, we must remember Jay Powell himself was a President Trump pick. I mean, he remained independent. Is there any guarantee that President Trump's next pick isn't also going to remain independent?
Well, again, we have to see who that will be. There's several names that are foremost in the running. So clearly there's an effort to sort of influence the Fed, and I just underscore that this point about Fed independence is important for markets overall. I think that's something to be emphasizing here.
Just want to bring us full circle before we let you go, Tim. We do have a rate decision today from Indonesia. We're not expecting any change, but of course we did get the news that there has been a trade deal between the US and Indonesia, waiting on confirmation from the Indonesian side, of course. But do you feel that this has moved the dial at all in terms of the potential for a surprise cut, or at least the commentary we get from Bank Indonesia today?
There may be some influence on commentary. I'm not sure that that's going to influence today's decision. I think it'll be much more driven by what current inflation and growth outlook is. The details of the deal, the trade deal, which you mentioned, still have to be ratified, and the pass-through of that into the overall economy has to be assessed as well. So I think that it's at the margin better news from a growth perspective. But I think it would be early to say that would be influencing Bank Indonesia's rate decisions today.
All right, Timothy Moe, Chief Asia Pacific Regional Equity Strategist at Goldman Sachs. Thanks so much for joining us today. Still to come, we'll have more on the deal President Trump says he has struck with Jakarta for a 19% tariff rate. We're going to speak with a member of Indonesia's National Economic Council next. This is Bloomberg. Welcome back. You're watching Insight. Indonesian assets in focus today after President Trump announced a deal with Jakarta for a 19% tariff rate. Let's get some more details now from our Deputy Bureau Chief, Claire Zhao, in the Indonesian capital. Claire, we are still awaiting a statement from the Indonesian government, but let's assume that this is all going ahead. So what's the anticipated economic impact of this deal?
Well, the devil is in the details, as most analysts have said, because even at a 19% tariff rate, that's still much higher than the 5% average tariff that Indonesia had with its goods shipped to the U.S. last year. So according to Bloomberg Economics, that could still hit about a quarter of Indonesian exports to the U.S. That's equivalent to about 0.3% of GDP. It also remains to be seen what kind of local sectors could be affected by improving market access for U.S. goods. Some sectors like technology, health, agriculture, and apparel have long been protected by Indonesia and are also responsible for millions of jobs here in Southeast Asia's largest economy. That could be top of mind for Bank Indonesia as it goes into its rate decision today. Economists are still split on that outlook. Some are still expecting that they will hold the key rate and wait until August to see how this trade war pans out. But some are also saying, especially with that surprise deal overnight, that this could tip the scales. And with the government now addressing a key source of uncertainty, it's now time for the central bank to step up and bolster growth in the economy.
Yeah, in terms of what happens next around the Asia-Pacific, to what degree is this deal potentially a template for other deals in Asia that President Trump is pursuing?
So the details are still scant, but based on the features of this deal that Trump has highlighted in his post, based on the features of the deal that Trump has highlighted so far, first of all, is full access for U.S. goods. That implies about zero tariffs for nearly all U.S. imports. Indonesia had initially proposed near zero only, and this is the same as what Vietnam had promised as well. The second thing that Trump had mentioned is transshipment. It goes to show how much this is a priority for Washington, for Southeast Asian countries to really close that loophole where China could divert its exports. And then lastly, of course, is the difference that was made today is that top-level discussions between President Prabowo and President Trump. It seems like that's added urgency and confidence to negotiations between Washington and Indonesia. And also, I think that also appeals to Trump wanting to be the ultimate deal maker in this trade war.
All right, Bloomberg Indonesia Deputy Bureau Chief Claire Zhao there in Jakarta. Let's get some more insights on this. We're joined by Heriyanto Irawan, a member of Indonesia's National Economic Council, which advises President Prabowo on policy. Thank you so much for joining us today, Heriyanto. I just want to start by getting your broad reaction to this deal. We are scant on details, as Claire mentioned, but what are the key takeaways, and do you feel like this was a good deal for Indonesia?
Yeah, look, certainly, in times of significant uncertainties, some level of certainty is very much welcome, right? I think this is also a product of clarity and detailed guidance from President Prabowo and also the sheer hard work from the economic team, right, in order to achieve this deal.
We don't have an official statement from the government yet. I mean, is that anything to feel any sense of concern about? When do you think we're going to get that confirmation and that joint statement? Or do you think there's a chance that Indonesia's been wrong-footed here like Vietnam was?
I think best is to wait for the designated team Paul to give comments on that. But I would say, though, that from what we understand, this is a huge deal, a huge win, in particular for the labor-intensive sectors, right? And it opens up opportunity for Indonesia to get additional market into the U.S.
When do you think we might hear a statement from the Indonesian government? Could it potentially be today? Is there a typical timeline around this?
We will hope for some clarity soon from a designated person, but I would say that from what we can see, that this is a good win for Indonesia, coming from 32% to 19%.
So your tariffs team was in Washington last week to meet with members of Trump's cabinet. I'm wondering if you can give a sense of the moods around those discussions and whether talks are continuing or if negotiations now concluded.
Yeah, the discussion has been very long, as you can imagine. We went through a lot of details, line-by-line discussion, understanding what each other's needs are. But I think, as has been commented by President Trump on his social media, that Indonesia will be importing significant goods from the United States. But it is important to also understand these are the products that Indonesia is importing anyway. We are shifting our imports from certain countries to that of the US. So from our perspective, this is a win-win-win in the sense that we are importing, we are shifting our imports, and another win is that we are able to get a relatively lower tariffs, and particularly, again, I will emphasize opening opportunity for the labor-intensive sector, much like garments and footwear.
I'm wondering if you can offer us a little bit of detail as well from what we're hearing behind the headline, which is, of course, Indonesia will buy US energy, agricultural products as well. Are you able to offer any specifics?
Right. The details, again, let's wait for the right team members to articulate that, Paul. I would suggest that these are the goods that Indonesia have been importing, like soybean, wheat, for example, and other agricultural products, oil and gas as well, that we are able to purchase directly from the United States.
Well, Indonesia is, of course, facing a 19% tariff. We were speaking a short time ago with Tim Moe of Goldman Sachs. He was doing a lot of modelling around the expectation of a 17% tariff. Do you feel there'll be any disappointment at all from the Prabowo team? And, of course, Indonesia is a democracy. Is this going to be tough to sell as a win to the Indonesian public?
Yeah, look, ultimately, this is a relative thing, right? What the tariff in this nature is not an absolute number, but it's a relative number. And, clearly, if you look at all the tables that have been shown around at 19%, if I'm not wrong, is probably the lowest among surplus countries with the United States. So clearly, this is very much welcome.
So Indonesian products being sold in the United States will be subject to a 19% tariff. Are you concerned at all that this may dent demand for Indonesian products in the US?
Again, tariff is a relative thing, Paul. If other nations are subjected to a much higher tariff than Indonesia, perhaps that will put Indonesia at an advantage to this arrangement.
Also, as part of that deal, Indonesia will buy 50 new Boeing planes. It's already waiting on a few planes that it's previously ordered but not yet received. I have to ask, where is the money coming from?
Yeah, this will be a business-to-business arrangement, Paul. The government may have facilitated the transaction, but this will be down to business judgment for some of the companies involved. But I will also add, Paul, that some of the preliminary comments that we have, or the feedback that we got from some of the garment and footwear manufacturers. Again, I want to emphasize the labor-intensive sector. Right, it is very positive feedback because, after all, if you think back, in the past 5 years, Indonesia have generated something like 16 million jobs, and perhaps 82% of that were informal sector. So this is a wonderful opportunity for Indonesia to properly grow and expand its formal sector, and will go a long way in terms of creating quality jobs, in terms of boosting the purchasing power of the mass market.
And how does this leave Indonesia in terms of its ability to compete against its regional peers, some of which produce similar products?
Correct. Again, Indonesia clearly has some way to improve, and the president understands the importance of the supply chain, and there's been a lot of emphasis and study and plan in place, and in particular deregulating certain industry to support investment into this industry to harness the supply chain. But at the same time, if one is able to get a relatively lower tariff into the United States, then all the better. All right.
Well, more broadly, Indonesia is, of course, one of the first countries to secure a deal with the United States. Why do you think this is, and what does it say about the broader US-Indonesia relationship?
I think the relationship has been very cordial, very amicable. As I understand it, there's been a discussion not only in this instance, but it's been back and forth discussion throughout. So we certainly welcome this collaboration with the United States government.
Indonesia also recently joined the BRICS group. This is a bloc that President Trump has criticized in the past. Was Indonesia's membership of the BRICS and President Prabowo's recent visit to Brazil as well for a BRICS summit, was that a sticking point at all?
My understanding, Paul, is that the joining of BRICS is purely for economic reason, opening up additional marketplace for Indonesia. So clearly our consideration is pure economics. There's no other consideration for that. So as far as that is concerned, I think the tariff that Mr. Trump has agreed with Indonesia speaks for itself.
Does this change the growth outlook for Indonesia at all? The US is Indonesia's second largest export market. Tariffs were a lot lower than this before, and the US doesn't export a huge amount to Indonesia. So what is your forecast for growth? Does it change?
Look, I would imagine that not only just with the lower tariff with the US first compared to other nations, but also importantly to also highlight the European Union Comprehensive Economic Partnership that President Prabowo has negotiated. That will also open up yet another big marketplace for Indonesia. So I will also emphasize that the garment and footwear export to European Union from Indonesia only account for 2% of what the EU imports. So in terms of future outlook, I would imagine that this is a double whammy positive for Indonesia in terms of, again, the labor-intensive sector, possibly larger access to the US given the relatively lower tariff compared to other nations, and a new market to the European Union.
All right, Indonesia National Economic Council member Heriyanto Irawan, thank you so much for joining us today.
Thank you.
Let's stay with trade talks. And President Trump says he's working on a deal with India that may be similar to Indonesia's. He's promising what he calls access to India in the agreement. So for more on this, let's get to government reporter Sudi Ranjan Sen. So Sudi, what's been the progress in the India-US trade deal? Does the trade with Indonesia, that deal, hold out no hope for any template?
Well, I mean, being one of the Southeast Asian countries to get the deal, it should. I mean, technically, that is what Indians are expecting, and is the understanding on the ground. But the India-US trade deal has gone through a lot of circles and back and forth. We now know for a fact the negotiators are back in the United States to tie up the last details. So till a trade deal is done, as they say, it is not. It's still under negotiation, and we still don't have clarity as to when it is going to be discussed. What we do know is the sticking points, being agriculture and GM crop. Those were the last sticking points that were there that the two sides were trying to work out. What kind of arrangement is going to be made, still not very clear.
Well, we've got India and China, meanwhile, seem to be improving their relationship. What's the big takeaway from Indian Foreign Minister's visit to Beijing?
Well, the big takeaway, if you can, I mean, if you look at the statements that are coming out both from China and from India, one that India and China have started talking about trade, and importantly, the Indian Foreign Minister during his bilateral meeting with his Chinese counterpart clearly raised the restrictive trade practices, and roadblocks, as he put it in his statement, indicating or referring to the problems that Indian manufacturers, in particular auto manufacturers, are facing with critical minerals. So things have, moved past negotiations on the border, moved past, the chill that was there following the 2020 border clash, to now discussing trade. In the recent past, we've seen China allowing Indian pilgrims to go across into Tibet after a gap of 5 years. So on the whole, the relationship appears to be on the mend. The big indicator after this, both sides that one can look forward, is whether Prime Minister Narendra Modi visits China for the SCO summit. He's supposed to, there is an invite, and the indications are that he will be going.
So how would you describe the current state of India-China relations?
Well, I would say it's still a relationship that requires a lot of care, a lot of tending, because there is a trust deficit on either side, and we've seen India, in fact, mentioning that there is a trust deficit time and again. So, and being the two most populous countries in the world, big economies, the relationship is not in the best of health. So it requires to be tended, it requires to be nurtured. Trade is one of the big issues, the big last mile sticking points that are there between the two countries. Net in sum, the relationship is on the mend, but still a long way to go.
All right, Bloomberg's Sudhi Ranjan Sen there. Thanks so much for joining us. Let's take a look at what's going on in Indian markets. About to open just a few seconds away. It's been a good few days for the Sensex. Well, it hasn't actually. It's had a 4-day losing streak, but it looks like we're about to break that. You see the currency showing a little bit of softness there against the $1.86, but then we see the Sensex just flat at the open. The bank index performing well. Of course, we had a very good set of earnings from US banks in the US session as well. But one bank we're going to be watching, HDFC. The bank's board says it's going to consider the issue of bonus shares on July the 19th. The market liking that news. HDFC shares currently better by more than 1%. The bank also planning to declare a special interim dividend at a meeting which is scheduled to approve the first quarter financial results. So HDFC in a statement to the exchange saying that it's going to consider a proposal to issue bonus shares to holders on July 19th. And maybe a special interim dividend as well. Still to come, exclusive interview with Squirrel AI about the expansion plans and the impact of China's crackdown on the edtech sector. This is Bloomberg. Nvidia CEO Jensen Huang arrived in China following news of Washington easing restrictions on chip sales to the country. Speaking at the opening ceremony of the China International Supply Chain Expo, Huang praised China's AI capabilities, calling its models world-class. He also highlighted China's open source AI as a driving force for global advancement, reaffirming Nvidia's commitment to continued partnerships in the region. Well, founder of Chinese edtech firm Squirrel AI thinks that the DeepSeek boom earlier in the year helped make people, especially parents, more aware and accepting of AI. Derek Lee spoke exclusively to Bloomberg on the company's expansion plans and the impact of China's 2021 crackdown on the edtech sector.
Actually, that policy gave us time very hard like hell, but indeed, it actually helped us. So when the policy shut down the tutoring center by human, actually it's a very good chance for our AI virtual tutor to boom. Especially and at the beginning of this year, everybody know DeepSeek, all the parents and all the kids now, they understand AI more and they think AI could, or perhaps most probably, to replace the best human teacher.
Now you're at a point where you're looking to expand a business into the US, or you've started expanding into the US, but share or give us an update on how that's going so far.
From the beginning, 11 years before when I started Squirrel AI, our AI center is actually based in US. So our structure and the product, the base is international. It's very suitable, also suitable for US market. And I think we want to start it from the mass because, the Asian mass is good. We are hoping that we can have more than 3,000 after-school learning centers in U.S.
We've seen Chinese companies or Chinese tech companies in the U.S. face issues, thinking about, for instance, ByteDance's TikTok, Huawei are some of the more prominent examples. You've certainly taken steps to mitigate any concerns by storing data locally, for instance, working with American franchisees. But is that going to be enough? And what kind of conversations, or have you had any conversations with Washington as well?
Actually, we just started. We haven't have conversation with Washington, but we made our own strategy. That's why we do not entering the school market. We do not try to persuade the education district because that is very hard for us. Why we started from the learning centers, the after-school tutoring centers is, so that is not so sensitive.
I want to ask as well about your investor base, because your largest investor, or among your largest investors, is Jeff Yass. He's someone who's quite close to Donald Trump or has ties into Donald Trump. Does that help you at all with any sort of regulatory hurdles you could face?
Yeah, sure. SIG actually invested us in 3 rounds all along, like they invest TikTok in 3 rounds consecutively. Of course, the relationship with Trump will be a very good thing for us. So I'm looking very closely how TikTok will do in the next. If they go through very well, that's a very good news for us.
What kind of financials can you share for us in terms of revenue or margins or profit as well?
Last year, our revenue of the distributors reached $300 million, and our gross margin is 70%, and I cannot mention the net margin now, but we will clear it when we prepare to IPO.
And talk to us about that IPO. What's the timeline, and as well, what's the venue that you would look at?
We want to, the time we prepare to IPO is we want to have at least 200 learning centers in US. So we want to start it maybe next year. And we also considered whether NASDAQ or Hong Kong stock market, which is better for us.
That's Squirrel AI founder and Chief Education Technology Scientist Derek Lee. Just got a few more remarks from Nvidia CEO Jensen Huang. He has been addressing that China Chip Supply Summit in Beijing. He just says that Nvidia has not yet received those H20 US export licenses yet. So the market has certainly, though, responded very warmly to the news that those chip curbs have been reversed. But Nvidia CEO saying that those export licenses for the H20 chips not yet received. Here are some other stories that we're following. JP Morgan posted a surprise 7% gain in investment banking fees last quarter. CEO Jamie Dimon says deal-making momentum picked up as market sentiment improved, and that's despite lingering risks from tariffs, geopolitical tensions and elevated asset prices. Citigroup shares closed at the highest in more than 16 years after the bank announced plans to repurchase at least $4 billion in stock this quarter. CEO Jane Fraser says returning capital to shareholders is now a key priority. And from banking to Labubu, Popmart says it expects first half profit to jump at least 350%, and that's fueled by global demand for its hit collectibles. Celebrities and superfans have pushed the plush monster dolls into international stardom, helping the toy maker's valuation exceed $40 billion. Before we go, quick look at our show tomorrow. We'll have more on Indonesia's trade deal with the US, with Marie Pangestu, special advisor to the Indonesian president. This is Bloomberg.